Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Triple Q report for Tuesday, February 8th, 2022. Before we jump into the charts, I just, as usual, want to encourage you to please click like each and every time you watch the daily Triple Q report or any content that Wicked Stocks uploads to the YouTube channel. It does help us out a great deal in being found on YouTube when people search for Triple Q analysis, Nasdaq-100, so forth and so on. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the daily Triple Q report. And so knowing when it's out there is important, and observing it and watching it before the opening bell is to your advantage when it's fresh, relevant, and usable for your trading and analysis. So let's take a look at the charts. This is just a recap, really, from several weeks ago. I think 3 weeks ago, tomorrow being Wednesday. 3 weeks ago, we settled below the channel bottom that is presently today, Tuesday, at 375.94, then eliciting a 3 to 5 week sell signal down to 327.19. At one point, I was down to, I think, 1 to 2 weeks when we got pretty close to reaching it. We got about, 60-70% of the way there. And then now we've had what I consider to be still a counter trend rally from last week. Now, not in the last few days, but earlier last week, certainly a counter trend rally. We never really did retrace up to 375.94. That remains our ceiling in the Triple Q that can contain buying through February if tested, into March, and once tested, we can fall back to 327.19 over the following 3 to 5 weeks. In other words, holding below 375.94, I'm still anticipating the rising channel bottom at 327.19 over the weeks to come. And it is 327.19, a long-term support level. 2 years in the making, that channel structure, able to contain annual selling pressure. So the long-term outlook still remains bullish for the Triple Q. It's just that the near to midterm, in other words, into March trade, remains heavy below 375.94. Now, in the daily SPY report, and we also, by the way, Wicked Stocks, we put out a free stock pick a week. We do 2 others for our premium membership on wickedstocks.com, 2 other stock picks a week, but one that's free that goes out on YouTube as well. And it was on Marathon Oil. I thought it was appropriate given the strong crude oil market that we're presently in the midst of. Marathon Oil is testing significant long-term resistance, actually pushing through it on an intra-week basis. It may set off a long-term buy signal this Friday if it closes above a key point. I'll let you watch that. But I do want to show you, the crude oil charts, because I'm a commodities analyst at heart. I've had a commodity advisory for several decades, and I've been putting out a daily crude letter really for over 25 years. And this has been an objective, this 92.22 to 93.06 area. It's long-term resistance. It's a channel top at 92.22, as you can see. That includes trade all the way back to the 2009 low and a descending 2/3 speed line just above it. That is projected off that 2008 high against the 2020 COVID low. Those are the 2 extremes that you use. And this is a significant zone of resistance. I don't know if it will contain annual buying pressures, but I'm telling my crude oil subscribers that it just might. This is a significant zone that could contain annual buying pressures. And from here, West Texas Intermediate can quite easily fall back to $68 a barrel over the next 3 to 5 months or sooner. And this is where the inflationary component comes into play with regard to the stock market. If crude does fall off from this area in the weeks ahead, that'll add support, in my opinion, to the broader stock market, and we should then see the Triple Q continue on to new highs over the next couple of months, and I'll get to that in a second as to what those signals would be, of course. But the real reason I'm showing you this is if we close above 93.06 in WTI crude March contract on Friday on this weekly chart, closing the week above 93.06 by a 1% margin, in other words, a 94 even settlement or higher in WTI crude on Friday, should then yield over the next 3 to 5 months or less 115.08. And this is where I think inflation will become a real concern. You'll see another 20% bump at the pump. And this also filters into the costs of many of our goods. And so inflation will be endemic, at least in December trade, will continue to be a conversation. And I think that will add weight to the stock market. So I think, can you trade the stock market? If you're an investor, at least 3 to 5 weeks out, and several months out, I think you can play the crude position, if you will. You know, what does crude pivot off of? Below the 92.22 to 93.06 area, it can fall back, and the stock market can regain steam and continue higher into the second quarter. And the inverse is true as well. If we close above this 93.06 at the end of this week, then I think that long-term objective at 327.19 is likely to be tested in the weeks ahead. It's at a target anyway, but it just makes it even more likely. So let's take a look at the triple Q. Back to square one here. 375.94 is that long-term channel bottom. We settled below a few weeks ago. I do have a rising speed line here. It's a rising 2/3 speed line. It's rising at a pretty steep rate. It's today at 353.02. I'll open the chart up and show it a little bit better here. I have it as a 2-star support level here in the support and resistance. In other words, it can contain, say, 3 to 5 day lows into later week. And from here, we can push back into the 370s over the next, this week, perhaps. By the end of next week, yes. Let's talk upside today. 361.04 can contain intraday buying. That level actually held nicely yesterday, contained daily buying pressures, and holding below 361.04 will keep 353.02 in reach today. But if we push or open today above 361.04, we just might reach 370.69 intraday. 370.69 is a descending channel top on the daily chart, can readily contain daily buying pressures, and if we close above 370.69, we should reach that more meaningful 375.94 long-term channel bottom, which is still sort of a convergent area between it and the 377.29 descending 2/3 speed line. In other words, if we were to test 375.94 to 77.29 over the next 3 to 5 days or so, and we just might, as long as we continue holding above that 353.02 rising speed line, that mid 370s, 375.94 to 77.29, able to contain buying through February, and below which, still anticipating the 320s. But if we close above 377.29 any day this week, and I don't see it happening over the next few days anyway, but if by Friday's close we settle above that 377.29 speed line, then I think we've got a good quarterly low. We should then continue into the second quarter, which begins on April 1st. Somebody asked about the months that I should stress. So into the second quarter, we should continue north to the the move high 408.71 in November, and I think even into the 420s over the next couple of months if we close above 377.29. Until then, we're on the defensive, and let's talk about the downside. If we break or open today below that 353.02 speed line, we should test 344.60 intraday. And if we close today below the 353.02 short-term speed line, I would expect a 334.15 low from a few weeks ago within probably 2 to 3 days. I'm expecting then a spike in volatility. And honestly, by the end of next week, we're really not far off from that long-term support at 327.19. So if we close today below 353.02, I would expect by the end of next week that targeted 327.19 long-term support where we can put out an annual low. I threw a lot at you today. I appreciate you sticking with me. Please click like each and every time you watch the Daily Triple Q Report and subscribe to the Wicked Stocks YouTube channel. You won't regret it. I'll be back tomorrow for Wednesday's Daily Triple Q Report. You have a great day, and we will talk soon.